What's up, everyone? I really hope you guys are excited as I am for the market tomorrow. We have some huge earnings to cover, and we have a ginormous interest rate decision ahead of us, and all of this brings nothing but opportunity. And on top of that, in today's video, we have an extra special treat for you guys where we have some very unique data showing what we'll call a situation in the market right now that only happened 6 times, including right now, over the past 70 years. So you guys better stick with us for today's video. If you're going to watch one video to the end out of this entire week, make it this one. So with that being said, Tom, let's jump right into today's episode.
Yeah, Mike, and I will say, what's the big thing we've all been waiting for? We've been saying it at the beginning of every single video lately, is these big earnings this week with Microsoft and Google, and they are out. And it looks like Microsoft so far is having a lackluster reaction, but Google is actually having a fantastic move back to the upside. So they've been running a lot lately, and they're getting back up towards 130. So they're having some good breakouts here in after hours. And Mike, looking at the earnings and the numbers for both of them, first off, we have Google. So Google's the stock doing well in after hours here. They beat on earnings. They beat on revenue. The YouTube ads numbers beat. The Google Cloud numbers beat. And their traffic acquisition costs actually came in a little bit higher as well. So, looking at the numbers overall, it looks great for Google here, and to see their ad revenue coming up here at $58.14 billion versus $56.29 billion last year is good to see. And this is actually good for other companies that deal with ad revenue. I saw that Meta was moving up in after hours as well, following them, and I wouldn't be surprised if other companies that rely heavily on ads would be moving up either.
Exactly, and what I think is so funny is Google's earnings were pretty good, but let's be honest, they weren't mind-blowingly amazing, right? And Tesla and Netflix last week had decent earnings reports. It's just the market didn't give them any love. So, I bet Tesla and Netflix investors are looking at Google's report right now what the hell? Where was our love last week? But that's just how earnings season is. Sometimes it's whack, and while Google's having a lot of love today, Microsoft isn't getting that same sort of treatment.
Yeah, they're really not. And Microsoft's numbers are actually pretty good too. That's the thing. They actually beat on revenue, came in at $56.19 billion versus $55.47 billion expected. The EPS beat there too, and I'm happy to see that. And their Azure revenue grew 26% in the quarter, although it grew 27% in the previous quarter. I guess if you had to really nitpick on this, that would be a small negative, but it still has great growth, and it actually was above the expectation for Azure. So I actually think they had good numbers, Mike, but like you said, the stock is obviously falling down. Now, Tesla, they maybe had some issues, where margins were falling, stuff like that. These companies, I'm surprised that Microsoft is falling off the way it is, but I guess like you said, these earnings are crazy, and it looks like right now it might actually open up fairly close to where they closed today, at least maybe around 348 to 350. That would actually be pretty decent. At least then it's not all the way down around 338 or 340. That would be brutal down there.
And Tom, just remember this, in the worst case scenario, it's worth noting that we are in an AI bubble right now, so if any of these executives want the stock to go up, all they have to do is mention AI on the conference call, I don't know, maybe 10 to 20 times, and before you know it, the stock will be up 10% in after hours, so keep that in mind too.
And I wouldn't be surprised if Microsoft did that with ChatGPT. I mean, how many times are they going to say that in the call, Mike? Let's do an over-under, probably 100 or something close.
Oh my gosh, that's hilarious. I don't know if I was listening to a montage of Google's last earnings report, but they said AI a million times, and it works. So we'll see what happens. But either way, earnings are crazy, and that's what makes this season so special. Tom, we have more earnings sprinkled throughout the week. What other stocks should we be watching?
Yeah, tons more. And so obviously tonight, right, we were all looking at Microsoft, Google, stocks like that. For tomorrow, we're actually having a ton of stocks also reporting. AT&T in the morning, Boeing, Coca-Cola, even Tilray for the marijuana stocks, for all the MJ players out there. Check them out. There's some big ones tomorrow morning. But Meta in after hours is going to be crucial, and they're actually moving up pretty well tonight with Google on those ad revenue numbers. So I'm glad to see that. Meta, maybe they'll surprise us and come in well. I'm kind of expecting a bit of a pullback here, but who knows? Maybe they'll talk about Threads adding some revenue in, and hopefully that outlook actually looks good. Because let's be honest, even if Threads flops, hopefully it at least is profitable, right? At least that's the hope, I would at least think.
Yeah, I mean, that's the thing. That's the hope, we'll say, like you said. And again, any optimistic outlooks with AI, not only from Meta or Microsoft or Google, but any of these companies can be what we'll call earnings report changing. Seriously, like you could have a crappy earnings release, but if you have a good outlook, a lot of times that's good enough to move the stock. But we will see what happens. And as a reminder, you don't always have to gamble with these stocks ahead of earnings. There is nothing wrong with playing the movement after earnings. And in my opinion, that's the smart way to play it. It's much less risky, and a lot of times it's just easier to trade. So like, for example, like let's say we're looking at Google or Microsoft or Meta or whatever stock tomorrow, and like let's say they gap up and they're running with a lot of momentum. There's nothing wrong with riding that momentum higher after the report, or even vice versa to the downside.
Exactly. Like Meta is going to be the big report tomorrow night. So I really don't think it's smart to necessarily be buying a bunch of Meta calls. And I'm sure that with them running up in after hours tonight, a lot of traders are probably going to be like, oh, well, they're doing well with Google. Should we buy it tomorrow? And the answer is probably not. But like Mike said, if it does get a nice breakout and it keeps going, it can definitely be a fun one to have a continuation with. And I actually like this with Google, Mike. They're actually popping up right now. So, if they keep going, I'm really glad that you pointed this out, because they're actually breaking out of a big range right now. They've been stuck up here for a while, and this earnings is finally what's getting them up through there. So, now maybe we can trade this continuation and it can be good for a few days.
Exactly. Well, Tom, earnings is not the only thing investors have to pay attention to for tomorrow. We actually have a ginormous interest rate decision, and as we all know, a speech from the all-loved Jerome Powell sometimes. But either way, the Honorable Jerome H. Powell is speaking tomorrow. Tom, fill us in on this event and tell us why it's going to be so exciting.
Yeah, the Honorable is going to be speaking at 2:30 p.m. Eastern Time, guys. We've been talking about it a lot the past week or so. Keep this on the radar. So first up, 2 p.m. Eastern Time, we're going to get that federal interest rate decision coming out where they raise their benchmark rate, or at least they're actually set to right now. So if we look at it, you can see that previously they're saying 5.25%, consensus 5.5%, etc. right there. And Mike, whenever we go look at the FedWatch tool, which we generally look at quite often, there's a 98.9% chance that they're pricing in a 25 basis point rate hike. I saw that tonight they actually have a 1.1% chance of a 50 basis point hike there. I know some people are actually thinking, well, why don't we go 50 basis points? Honestly, it usually never happens that way. It usually goes with what the percentages are. So I'm going to stick with 25 basis points as in what I'm thinking is going to happen. I'm sure Mike is going to stick with that too. And it's going to be crazy, Mike. We always get crazy movement with these big events, and pretty much from 2 p.m. Eastern Time onwards, expect a lot of volatility.
And what you really need to know is if we see a 50 basis point rate hike, or if we see no rate hike at all and they just pause, that means there was a big surprise, and that's where there would be a lot of opportunity. If we see a 25 basis point rate hike, which we're probably going to see, then, we'll probably see mostly normal movement, but anything besides that, you better buckle up. And we actually have a really cool chart showing you what the market does on average with each Fed speaker, but of course, we're going to focus on Powell, which is the red line. So pay attention to the red line. We could see ahead of the, what we'll call the event, normally the market rises a little bit, and it's mostly choppy, but it does go up. But once that interest rate decision is out, normally it just goes all over the place for a little bit, but then ends up falling as we get closer to market close. So definitely keep this data in mind, considering tomorrow's one of those days.
And this is actually one of the coolest charts I think I've ever seen. And Mike, I don't know how you found this, but hey, kudos to you. If you guys enjoy charts like this, smash that like button, subscribe. We're always bringing you awesome charts like this. And man, it takes a long time to find some of these. And this is one of the cooler ones, Mike, to see exactly how this movement goes with Powell here. And it's interesting to see how much it actually dips down towards market close, because it looks like it, obviously like Powell has pretty good movement there, but at the end of the day, it ends up dipping down a lot, and he ends up being like the lowest one here out of everybody. I don't know about you, Mike, but I want Bernanke back. Bring back that blue line. I mean, that was looking good back then.
Right? Yeah, so very interesting stuff there, but just keep this in mind for tomorrow because it is about to get wild. But another thing worth noting, Tom, if we jump back to the charts really quickly, is the good old Dow Jones Industrial Average. You can look at the index itself or you can look at DIA, doesn't matter. The main thing you need to know right now is that the Dow has been on a crazy win streak. It has technically been up for 12 days in a row. And this data is from yesterday, so excuse us for the 11-day win streak data. But either way, the Dow has seen 11-day win streaks only happen 6 times in the past 70 years. Yes, 6 times in the past 70 years. This is extremely rare, and on average, 6 months after one of these signals, the Dow continues to rise by 11%, which is pretty damn good if you ask me. So definitely keep this in mind going forward. Tom, what do you take away from this data, and what are your thoughts on this?
I think it's really interesting because, the Dow doesn't really go on win streaks like this often, but it's interesting that whenever you look at the average, it's like 6-month return there, that it's at 11% on this. I mean, that is pretty good in my opinion. So I like it. Maybe it shows that like we're in a bull market, and I would say at the moment we definitely are. The way that we've been seeing the market run up, especially the Dow, I mean, that's fantastic, especially since the beginning of this year, maybe towards like October, November of last year, we've just been seeing stocks do very, very well. So I'm not surprised. I think it's just showing that maybe we're in a bull market, and it's really good data to see, especially if you're a bull out there. Now, obviously, every situation's different. A lot of people are projecting that the market's going to fall. I know that we talked yesterday about some of those big banks and some of their projections for the second half of this year not being the best, whereas this data maybe suggests differently. But, like I said, every situation's different, but it's definitely good to see this historically that we would move up from this point.
Yeah, and what I think what this data is really screaming is in all caps, rotation. Rotation, rotation, rotation. If we go back to the charts and let's say we look at some tech stocks or just the NASDAQ overall, they have been the stars of the show basically all year long, right? Whether it's Nvidia or QQQ or Microsoft or whatever, those big tech stocks have just been ripping to the upside, but it just can't last forever. You can't just have Nvidia be up 20,000% and have that go on for forever. So what we see from time to time in the market is sometimes you see tech stocks do good, sometimes you see value stocks do good. Normally when the Dow runs up, that means value stocks are doing good. And if we look at the NASDAQ recently, it has actually been underperforming the Dow. So what I'm really taking from this is, hey, the big money, they're not completely selling out and panicking with tech stocks, but they're definitely taking money out of that area of the market and putting it into the value stocks. And honestly, it's hard to disagree with that because, the charts don't lie.
Yeah, they really don't. And, a lot of these value stocks in the Dow, like, Walmart, Caterpillar, KO, stocks like that, I mean, they've been doing pretty good recently, having nice runs. Now, I'm not saying they're all up every single day, but it's great to see that those stocks are starting to do a little bit better. And I agree that rotation is going to be very, very important here over the next 6 months or so. I think we're going to see a big rotation out of many tech stocks into a lot of different areas of the market. I even agree that I think that we're going to see some rotation into maybe some of the smaller like growth stocks too. Some of those that haven't done quite as well, I think we'll start to see some love here also, but it's definitely interesting to see that, Mike. And with the Dow being on the big run like it is, it's definitely a good thing to keep on the radar because, man, if this keeps going at this rate, the Dow's going to be retesting highs here soon. I mean, I can't believe how close it is right now.
I'm counting down the days, baby. Let's go. Alrighty. Well, with that being said, Tom, let's jump right into some setups for tomorrow. And one stock I'm watching very closely is Amazon. And some people are going to hate me for this, but it's actually to the downside. Amazon has like a decent support level right around 128. If it breaks below that, I would love to short this one lower. It has not been doing like horrible lately. It's just been like particularly weak. And if we see like the overall market fall as well, and Amazon break below like 128, I think it could make for a pretty good downside setup.
I think it could too. That's a pretty good support. And I was actually watching Amazon under that today for a good move, and it didn't really like happen in, a good enough way, in my opinion, to enter. So I'll just keep waiting for it. But I do like that break below 180 as well. And man, I think I'm also going to disappoint some people, unfortunately, for tomorrow. But I'm looking at Tesla in both directions, but honestly, more of to the downside. So hate to say it, but Tesla puts are on watch for tomorrow. If we end up breaking under this big 265 support, I'm going to actually look at some puts. And one big thing that I'm going to do tomorrow that I think would be a smart thing to do is to maybe target 260 to the downside. So if we break under 265, watch 260. And this is the big reason why. If we go over to the book map, Mike, there were a ton of buyers today at the 265 level on Tesla, and we hit there. End of day, actually, very, very closely. So we hit there, and then we started to come back up in after hours a little bit. So if we get under that 265 area, I'll look for puts. And then what's even better is that there's actually a bunch of buyers just a little bit lower down here at 260. So I think that'll be a good area to come test. I don't think that necessarily we'll get much lower than 260. I think that's a good area to target as well. Even just for like a normal move with Tesla, like I would say a $5 range is pretty good for them.
Perfect. And if you guys want to get X-ray vision using Bookmap for the market, definitely check out that first link in the description in the comments down below. We have a sweet discount with Bookmap, so definitely check it out. They're awesome. But my next stock is actually GDX, and I am watching this one to the upside tomorrow. And it's essentially it follows like gold miners. So normally on like FOMC days, we do see precious metals move in like a decent way. It's not always to the upside, but a lot of times they have some pretty good price action on days like this. So I am watching GDX up tomorrow.
Yeah, I think it's awesome. Gold miners, obviously, it will move a lot with gold. And, like you said, it moves a lot on those FOMC days. So keep your eyes on GDX. I like it too, Mike. With my next play, it's going to be a little bit of a weird one to the downside. So we always talk about earnings and not playing them before the events, but maybe playing them after. And I'm actually going to keep my eyes on Spotify. Look at this daily chart of Spotify right now. I mean, I don't know if it can get much more bloodier than this, but I will keep watching them to the downside. Like if they start to break under 140 and then 138 tomorrow, I will definitely watch for puts. I mean, this is a brutal drop with earnings here, and I think that we might see a continuation, especially just considering that momentum. I mean, sheesh, I'm glad Tesla didn't fall off that hard. That would be really brutal.
That would have been nasty, for sure. Alrighty, well, Tom, it's now time to jump right into those momentum plays. And with the first one for today, we have Affirm to the upside.
AFRM, nice run this morning. If they can actually hold this support and then get back up above 1780, go ahead and look at calls. 1780, we saw a couple bounces right there today.
All right, with the next one, we have Netflix to the downside.
NFLX, yeah, pretty bad movement, honestly, today. Pretty good, like, double bottom, pretty close to, like, 426, so I'll just make them break right below there, 426. There was a lot of movement at 427, but I would really wait for 426.
All right, and then with the last one, we have TLT, and we need both directions.
TLT, oh yeah, it's getting crazy, and I would expect with Powell tomorrow, TLT might go insane. So if it breaks above 101.50, look at calls. That's pretty big, and we're getting pretty close to that $100 support here. But if we break under like 180, then to go ahead and look at those puts.
Alrighty, so we have that downside level on TLT. If it breaks below that, we're watching it for puts. We have the upside level for calls. And then don't forget about Netflix with the downside level there for puts. And then don't forget about Affirm with the upside level there for calls. But it is now time for the big money $4.5 million trade of the day, and we are looking at the big bad NVIDIA, but actually the put option. So some whale dumped, like I said, $4.5 million into the NVIDIA 460 strike put options that expire on September 15th of 2023. This is like a very high risk, high reward setup. Like the risk reward ratio itself is really good. It's just timing with this one. It's like everyone in the world knows NVIDIA is overbought, but it has also been overbought for a while, So like technically there's nothing stopping NVIDIA from getting more and more and more overbought. And that's the risk with this setup. So like you have to have balls of steel to play it. If NVIDIA tanks, it can be an absolutely amazing trade. But in the event NVIDIA doesn't tank, you have to be able to manage your risk with a setup like this.
Yeah, exactly. That's going to be the big thing. Like, if we do end up seeing a big run out of some of these tech stocks with earnings like Google, and then maybe Microsoft comes back, and maybe we have some better ones next week even, and we start ripping above like this big 480 resistance, you're going to have to manage that risk really, really well if you're into puts right here, because who knows, we might get to 500, we might get to 600. I mean, I've seen some crazy projections even from some of the analysts on this one. So I'll keep it on watch, Mike, for sure. That's a pretty crazy big money play here, and I actually like it. I think it's going to be good. I have a feeling that the FOMC event tomorrow is going to shock the markets a little bit. We obviously had a pause. Now we're going back towards this 25 basis point hike. I'm curious how the market is going to react to this. And I hope Powell maybe walks back some of their recession statements or something, but that mild recession still in the back of my mind. I'm curious what the Feds have to say about that coming up at the end of the year. And then we have the big trend line on NVIDIA. I mean, it's been following this trend line nonstop lately. So what I'm thinking is maybe if we want to follow the big money here, maybe wait for a move below the trend, or maybe another move back below this big 450 support as well could be a good entry point.
Yeah, great point there. And, if you guys want to get access to these big money plays every single day for free, make sure to subscribe. When you subscribe, you'll see our videos recommended to you more often. Obviously it costs you nothing to subscribe, and it takes us hours to make these videos and to find all of the great information and to make it just a nice and easy 20-minute video to watch forever and at night. Sometimes we're a little bit funny too, which helps. So yeah, definitely subscribe. You'll see our videos recommended to you more often. But tomorrow, we seriously are set for a very important day between the earnings, the honorable Jerome H. Powell, and everything else we have going on in the market right now, like the Dow's 12-day win streak. Things are about to get exciting.
It really is. I mean, I cannot believe all the stuff going on right now. There's so many big events in the stock market. Just, stick with it right now. I know this week might be a little bit volatile for a lot of people. If it's not the best, just keep your head high, right? Manage risk well and, keep going forward, because we're going to have some big moves over the next few days. There's going to be some big opportunities out there. And I think especially towards the end of the week, like Thursday and Friday, after these events are done, I think we'll actually start to get some pretty good ideas on where we're going to be going here in the shorter term. So hopefully that happens, and then we can start to catch some fire movement. So stick around, hit that subscribe button, because there should be some fun stuff coming up the next few weeks.
And lots of great opportunities too, just because the market will be volatile, that doesn't mean, there's, no opportunity. A lot of times there's a lot of opportunity in these situations as long as you're disciplined. If you just dump your whole account into some random earnings play, you shouldn't be surprised that you lost a bunch of money. However, if you see a nice shift in sentiment and you see a giant rotation happening, and let's say Powell has a big statement, there's a lot of money to be made there. So prepare, guys. Keep your head up high. Stay disciplined. And let's have an amazing week, guys. I am super excited. And besides that, guys, thank you guys so much for watching.